A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shain Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to do some live trading with our time price offering charts. I want to thank everybody who came to the MT5 workshop earlier today and the TPO workshop yesterday. Awful lot of workshops today. We're going to get back to basics, back to a normal stream where we're going to go ahead and run through this week's performance. Kind of flat. That copper trade yesterday didn't really do us any good, but we've got a fresh litany of trades in front of us. I'm looking at one right now in the E-mini Dow futures and also one in gold futures. So we've got an opportunity here to make some money. We had a NASDAQ 100 trade that was absolutely fantastic. It was great for us. Came across the board yesterday and just blew up in our favor. NVIDIA has been the big story. I'm going to go ahead and recap what happened in NVIDIA and also a major hacking operation discovered here in the United States from the Chinese government, courtesy of the CCP. Oh, man, I'll tell you what a mess. We've got Trump declaring a state of emergency here in the United States over the electrical grid. A lot of people have talked a lot about the electrical grid, and it's one of those things that is just a huge political issue. We've also got some interesting stuff coming our way with regards to initial jobless claims, and we also had a few other figures out earlier today that aren't major market drivers, but they are decent ones that we need to be looking at. And by decent, I mean they give us an idea of what's going on economically. And lastly, we've got the Jackson Hole Symposium. I'm going to have live coverage for you tomorrow, 10 a.m. Eastern. I think we're going to start about, 9:45 a.m. Eastern, and we're going to be on, and we're going to go ahead and trade through Kevin Warsh's initial announcements there at the Jackson Hole Symposium. Could be a blockbuster. Definitely have that up as a 5-star economic event. All right, everybody. So welcome back to the room out there in YouTube land. I want to welcome you morning, noon, night, wherever you may be. Let's go ahead and take a look at the How to Trade community. Andrea Gar, welcome to see you, Andrea. It's been a few days. I'm confident you're doing well. Confident you're killing it with your trading. Fantastic. Tuku, always a pleasure. Tuku, thanks for joining earlier. I hope you got a little bit of something out of that MT5 tutorial. That AI, the development of the AI assistant is really something else. All right, let's get on out to price action here and take a look at the trades that we've got on the board right now. Very, very basic read. If you remember from our TPO workshop yesterday, we've got upper value, top of value, bottom of value, POC. That POC, that initial balance that developed in the overnight, we're trading right up in that zone, but our U.S. session POC point of control is way down there below value. What does all this mean? It means it's just a dead fish rotational market for the YM, up about 0.39% on the day, so slightly bullish. A little bit of bidding here earlier in the U.S. session, but nothing really to write home about. I'm not blown away at all by what's going on here in the E-mini Dow, but what we can do on a flat day is I want to sell the upper end of value area right there. We've got sort of the top, sort of that dotted line. We're going to shade that by a few ticks, but you can see values right there at about 53,781. So we're going to be looking to sell right beneath that, 53,778. We may even bring that down a little bit more to be more aggressive. I want to get in the markets Thursday. It's time to turn and burn and make some plays if they're there. So right there, we're going to go over our performance metrics for this week. We're in the green, but I'm not real happy. Our commissions compared to what we've made are a little bit high for my flavor, so we've got to do a little bit better job. The copper trade yesterday, once again, was not good to us. Probably not the best trade to take, but you gotta trade. Wednesday, when those trades set up, you gotta take them. We had an opportunity potentially to take a little bit of money off of it, but we decided to let it ride, and we ended up getting stopped. And the problem in a thin market, slippage can be an absolute monster, and that slippage got us for about $75. So always remember, guys, it's about spreads, it's about slippage, it's about trading things that are deep, liquid, and target rich. We're also going to take a look at natural gas today. Natural gas is going to be our fundamental of the day. We're probably going to do a little bit of trading if we get an opportunity on the market profile, but you can see 2.25% natural gas futures are up. We definitely will be looking at that. So this is probably the first trade of the day that we're looking at. E-mini Dow futures. I want that short right up at the top of value. I believe that if we get that trade, we're going to have a pretty good opportunity to make a few dollars there. Gold. E-mini gold, not E-mini gold, but just gold, full-size gold futures. We got 2 contracts on right there. We're looking to sell the top of value. Why? Because it's a flat day. It's a flat day in the gold markets, 0.35%. And this we're in an interesting area here. We're only about $8 off, so about 80 ticks, but we've been getting a lot of volatility in gold. We got a very good chance to get this one in the next half hour, maybe to 45 minutes. So I definitely would love that gold sell. 2 contracts. There's plenty of leverage for that. This YM, we're going to go with 3 contracts. Let's go ahead and dial that up to potentially a 4. Let's go. Let's make that a cool 4. And what that 4 will be is about $20 per contract. It is Well, what would you say? It is Thursday. It's time to trade. Anything worth doing is worth doing right? In any case, there we go. So we're going to go ahead and be dancing with that relatively soon. I look forward to getting in on these trades. I think that we could get into a couple pretty good trades today. I really do believe that. Of course, I usually believe that. I always believe our best trade's our next trade, and opportunity is always right around the corner. Those are the two premier trades that we're looking at right now. We'll run through the other litany of assets, WTI crude oil and things, but it just isn't really developing. A lot of these, the train's already sort of left the station. You'll see E-mini S&P 500 broke out. That's your big mover today. Definitely sort of buzzing on the NVIDIA news. Probably won't get a market profile trade there on your ES trade or your E-mini S&P 500. NASDAQ sort of broke high in the last half hour. I was relatively confident we were going to get a POC buy there out of the NASDAQ, but the NASDAQ's blown high up about 1.25%. It is the big winner on Wall Street right this minute. All right, let's take it down to WTI crude oil. Crude oil, you can see potentially we've got a good trade that's developing right here at our point of control, about 82.44, but we're still a ways off of that. More than happy to put the trade in the queue just to have it there, just in case it comes our way. We will be trading a 3-lot there, significant size. That size is not small, and we're going to go ahead and be looking to shade probably right around 82.45, somewhere in that zone, and that will be our buy order. Take profit. We want to make a little bit of money there, probably 200. That would be a nice trade for us there in WTI crude oil. And now let's take a look at a new contract we haven't looked much at, and this would be your natural gas contract. This is going to be your Henry Hub futures. This is underground storage natural gas, and you can see here in the United States trading about 2.93. This is going to be one of those contracts that not many people love to trade, at least day trade. However, it's up about 2.25%, 2.3% after the inventory figures earlier today. Is this a tradable asset today? I would say yes. I definitely would love to get down here and buy this on the point of control. It's just a question of whether we get a shot at any of these trades. Bid right there, buy right above that. One contract. No, we're going to go ahead and take two contracts, and that'll be about $20 a tick, which is pretty standard. Pretty standard stuff if you're looking at natural gas or really any type of energies. At least if you're trading full size, something like that, maybe 160 to 200. We'll just have to wait and see how it pans out. All right, gold sort of retracing back down, and then our other hot zone, the one that we're sort of on the cusp of trading right there, is going to be your E-mini Dow. So those are our trades. Those are our outline TPO trades. We'll see if any come across the line. And there's some other things that we can do, maybe pull some tricks out a little bit later in the session if none of these do develop. All right, so today, TPO Charts Live Trading Futures Forex Market Profile. If you have any markets that you'd like to look at, be sure to pass them along in the live chat, and we'll be sure to look at them. You see right here in the NASDAQ support zone, this was an absolute banger. Some trades are bangers, no question about it. Some trades are big-time trades. You can see right here, our key level was about 29,075, and our next level was 29,375. And as you can see, nice, beautiful trend line here on the weekly. There was sort of your base. There's your second touch, so your trend line developed. And then right in this zone where the trend line interacted with that 38% retracement, you had 28,996, and we were looking to buy 29,075s, and it was an absolute fantastic trade to the top side. Let's take a look at the 30-minute chart, and you can see exactly where we hit it right there. Right in this zone back in here. What was that low? That low was what? 29,028. We were looking for 75s, and we just exploded to the top side. We can thank NVIDIA earnings for that. NVIDIA came in with big-time top-side beats. That was an absolute fantastic trade and an easy 300 pips. Didn't really go against us, but a few points, and it didn't stay negative very long. Absolutely the kind of trade that I'm looking to execute. On a large scale, that was a good one. That was a really good one. So we always love it when these trade ideas come into play. You'll notice at the longer-term levels, longer-term 38% levels, maybe longer-term trend lines, they have an incredible amount of importance, and they do really dictate what happens on an intraday basis. I mean, let's go ahead, click our TPO chart off here. Don't really need it for a CFD, but take a look at this. I mean, our trend line was money in the bank. Right there, a trade idea came out right in here, came down, hit this beautifully. That trend line was absolutely money. That weekly trend line on a 30-minute chart was just money. The downside support, whatever you want to say about it, the market explodes after NVIDIA, and you have it. Then you just have a big winner on your hands. So always love to pass those along. Be sure to keep your eye out on your inbox. Probably have a trade idea a little bit later today. Just have to figure out exactly what we want to target. There's so many options right now, and I'm excited to get in on our next big level. So macro levels, I love them. I never ignore them. I think they're very important. Bitcoin explodes. Macro resistance up next. This was a trade idea that's finally coming our way. It's been a while. We had a near miss on our entry not too long ago, but we're looking to step up and sell about 81,750s. And that's a very aggressive play. We've got 83, we've got 83, about 84,000 is going to be topside resistance for Bitcoin. What I would be looking at here is just a hyper-aggressive play to the downside. I believe we're going to be in rotation between that 84 and that 70 for quite some time. I would be really surprised. In fact, I would be shocked if this market blew high over 84 with any real meaning. That's why I really want to sell right up there, 81,750. It's not the best entry point in the world. We probably could be looking at 82.50s now, 82.5s. I think that's a pretty good area to be targeting, but right this minute, it just isn't there for us. We've got to wait for maybe another leg up in the short term for Bitcoin, and then we'll have a great opportunity to sell this thing. So I'm excited about Bitcoin. I'm excited about a lot of things. Football season's probably at the top of the list, but as far as trading goes, we do have some trades out there. So this Bitcoin trade, you'll see the yearly chart is extremely important. This is one that we've just got to be smart about. Just got to be smart, and when the time comes, we'll execute. Patience, guys. They pay us to wait. They don't pay us to trade. All right, so what else do we got to go over today? Week 35, 2026. Interesting zones that we have developing on those TPO charts. It looks like we are going to get that E-mini Dow trade here any minute. Gold's going to be a little bit trickier, but I'm watching those out of the corner of my eye. Week 35, U.S. T-bill auctions, really nothing on Monday. Tuesday, consumer confidence, very low, depressed, no question about it. Wednesday, PC price index, inflation came in hot. That was not a good print for PCE. Suggests that maybe the Fed doesn't have things under control. Maybe the bond buyback brought a little bit more angst to those yields. And the yields, really, realistically, the bond yields in the bond market, they all don't believe that the inflation problems are over here in the United States. And that PCE price index number from yesterday sort of bore that out. Thursday, jobless claims, Tokyo CPI. Those are the big ones for today. We're going to go ahead and take a look at our U.S. dollar, Japanese yen. We had a trade idea out forever that I was highlighting on this. Just haven't really got there yet. I'm sort of looking at it pretty much every day. And the weekly chart is basic, very, very basic for the dollar yen. If you do see this type of market structure, it means it's extremely tradable. Spike high there, huge plunge, came right down, and now we're sort of rebounding. Something like this could be a very good trade, and we definitely have been looking at this one for seemingly ever. I want to sell 160.49s maybe tonight on Tokyo CPI. That's going to be your inflation numbers out of the Tokyo area. Potentially we may get this trade. Very, very tight week. Very, very tight 2 weeks, to be real honest with you. August is sort of going out with a whimper when it comes to the Japanese yen. I definitely would I want to be a net seller up there from 160.49, and the reason why is this market, when it breaks, more than likely you're going to get an overextended week. Right up there around 49 is going to give you a fantastic area potentially to sell. And I think that could be a very, very good thing. I would love to get it tonight. All of a sudden, the yen is really tight. The yen is usually never tight. Usually we're trading with significant volumes and also significant daily ranges. It's not happening. The Japanese debt bubble, the Asia-Pacific debt bubble, the U.S. debt bubble has everybody sort of up in arms. We don't know what to do. We're worried about bonds being as high as they are. However, we're not ready really to throw the towel in on our Forex trading. Although we haven't been covering the Forex very often, what I will say is this: flatlined right now. Typically, it's the calm before the storm. Something's going to break in the dollar yen. My guess is it happens after Labor Day. Dog days of summer right now, guys. I can see our stream attendance is down. People aren't really trading right now. It will kick up big. It will kick up big after Labor Day. I almost guarantee it. I've been doing this a long time, and it's always just frenetic. It's crazy action after Labor Day. I'm looking forward to it. I think it's going to be a lot of fun. So definitely be ready on that dollar yen. Maybe not right this minute, but probably coming our way relatively soon. All right, gold. Let's take a look at spot gold. Now, this is a price action chart. There's nothing on there, only price action. A lot of, I don't know, what smart money concept traders, ICT traders going to go, okay, there's a liquidity sweep, there's a liquidity sweep, there's a liquidity sweep. Oh, that's great, right? What we want to know is right now, is gold a buy or a sell? It's that simple. So for me, I really am respecting the bullish price action that's happened in gold, and it really came to pass when we started to hear that the U.S. Treasury was going to buy back the bonds and inject the capital into the system. We really believed that, hey, that's going to increase the money supply, and that's going to make it really difficult to keep gold down. Since then, we've seen gold rally from about 4,000, really a nice compression right around 4,000, and a nice hot break up to about 46.10. It feels like the next leg is going to take us up to about 5,000, something like that, right? So when we look at something like this, we say, okay, what's happening? Now, one of the tricks that they always show you online, and that everybody's a market analyst and they all know everything, people would draw a trend line like this after the fact and say, oh, see, look, one touch or two touches right there. And on the third touch, we had compression and then a break, so the reversal's on. All right, I tend to agree with that. It's old. What do we do now? I have a buy-side mentality. I would love to see a pullback in gold, give me an opportunity to buy this thing, especially when we're looking at the U.S. dollar index sort of hovering right around 99 and more than likely headed lower, especially if the Fed does not cut interest rates. Now, or excuse me, hike interest rates, not cut, hike. Something like this, 38%, 44.16 is a great level. It's absolutely fantastic. I'd be looking at probably 44 and a quarter, 4,425, 44 and a quarter. Pretty good area down there, maybe 44 even, if you're a little more conservative. For me, that is what I would be looking at. Long side plays, I want to make my mistakes to the long side in the gold market. Of course, unless we're scalping TPO, then that's completely different. But as far as a trade, a swing trade, or maybe a pure day trade, you probably want to be looking long from this zone right in here. All right, let's dial our price, not our price action, but our duration on our charts down to a daily, and we'll start to really see how things are developing here. I'm on a real short time frame. Not a real short, it's a daily, but you'll see what I mean. Okay, 38%, 45.53, pretty darn good long. That's a good long scalp. That's not necessarily a position long. I would be looking right there. What's the low today? Today's low right around 45.64. Something right in that area is pretty juicy. So I'd be looking at 45.53, 45.55 as being potential support, and it'd be a great area to get in there and maybe dig on a scalp. I think that could be pretty good as well. 62% is a pretty good level, 44.65, but honestly, I wouldn't be trading 62% in sort of in isolation right this minute. I'd be looking to do something like this. Now, you'll notice there's no other indicators on the chart, just our Fibonacci's. And what we're talking about achieving here is something called commonality. This is exactly what you want to get accomplished when you start trying to trade according to the tenets of fractal geometry. When you run a long-term Fibonacci sequence, and then you run a shorter duration Fibonacci sequence, and all of a sudden those levels start lining up, we call that commonality. And that sort of suggests that the fractals are in play here. And that means that bigger wave is sort of comprised of smaller waves that represent the structure of the big wave. That's all a fractal is. When you hear the word fractal, everybody runs for the hills. They go, oh gosh, it's hard. It's next level. It's a challenge to understand these concepts. Fractals are easy. Look at a mountain. The next time you see a mountain, look at the mountain. The idea behind fractals is the rocks that make up that mountain roughly comprise the aggregate of the mountain. So if you've got a giant mountain like this, your little rocks are probably going to represent the larger mountain. They're just going to be much, much smaller. With our waves, that's essentially the idea behind fractals, and trading with fractals is, number one, you want to see the small waves represent the big wave. And if they do, then you have an opportunity to maybe build a trade based on levels that coalesce between the time frames. That's easy. It's not that hard. Essentially, you run your Fibonacci's and you see if they line up. So right down in here on gold, we got a banger right there. We've got 38% on that long-term level, 44.13, somewhere in that zone. And then you've got an issue right here at 44.03. So that's about a $10 range that is rock solid support. I like it. I think that could be a fantastic area to do a little business. So if I'm trading gold, I'm probably a scalper, a net bidder from about 45.55, and then I'm probably looking at a position long down there right around 44, 44.10, 44.09. Those are pretty strong levels. No question about it. Let me see. Captain Crunch, we here, just not chatting, laugh out loud. That's all right, Captain. No worries. If you guys don't want to chat, I'm not going to make you. I'm not going to make you chat. Let's see. Lewis, good to see you, Lewis. Welcome. If you guys have any questions at all, be sure to ask. Now is the time to do it on our live streams. Interactive trading experience. If you have any questions at all, be sure to ask. All right, we're still sort of holding out hope, and I hate saying hope because hope typically means you're a loser. I'm just kidding. It's good to have hope. It's not in the markets. You don't want to be a hopeful trader. You want to be an optimistic trader, and you want to be a confident trader. You do not want to find yourself hoping. You find yourself hoping, you've probably already lost. Right here, looking at the sell, the top of value. If you guys tuned into that TPO chart workshop we did right up in there, that's a fantastic area. Value area high would be a great area to take that short. As far as what are we looking at now for gold? Gold, I don't think we're going to get it. 46.78, you see we're trading down to 63. What I would do right now is pull that upper end of value, sell. We just flat didn't get it. But however, the sellers are in control of this thing. Look at our point of control, our POC. So your overnight balance is somewhere right in this area, right around 55. And then your U.S. session POC, when the volume is in play, when the players are there, you're looking at about 46.50. That's fantastic. 46.50.7. So I want to go ahead. I want to buy limit order, point of control, 46. Let's go 46. We don't want to take too big of a draw, but we do need to be smart about what we do. Let's go ahead with 46.51.2. I do like that idea. 46.51.2. Relatively, I wouldn't say it's an aggressive entry, but it's definitely one that we need to get if it's available. Are we looking to make 1,000 on that trade? No, not really. Let's take this right now, maybe 460, see if we can get in on a metals trade that looks to be coming our way. It's only about $10 off, about 100 ticks. However, gold's been on the move. We may get that in the next half hour. We just got to wait and see. Sean Evans. Hello, Shane. I'm enjoying the show. Thanks. You're welcome, Sean. I'm glad that you dropped by. Dog days of summer. You start to figure out, they have an old saying of when things are going pretty well, realistically. We'll show the account metrics here in a minute. But when things get tough and the markets get slow, it's sort of the old saying, the winter soldier. Anybody can be happy when everything's going well and there's a lot of action and you want to trade when it's on. It's the people that show up and they take a look at slow markets and they go, man, how are we going to make a few bucks here? How are we going to do this? Those are the traders that typically you find stand the test of time, those that are interested in learning how to trade slow markets. There's no question about this, guys. These are slow markets, but they've been pretty good to us throughout the month. So let's go ahead and see what we can do moving forward. Let's go to our YM trade. Stubborn trade. Still love selling on top of value there, though. So let's go ahead. Probably the best trade on the board would be that gold buy. Let's go right here. Go around the horn. Take a look at a few of our contracts here. Let's go turn our TPOs on, and what do we want to do here? I want to go ahead and take a look at WTI crude oil. We've already looked at it. There's our trade. I mean, we're not going to get it. We need to be realistic. Not really much going on there. We're sort of trending a little bit higher. It was my sort of prediction earlier this week. A lot of people were crude oil bears. I said, yeah, you're probably going to see a weekly close up above 85. I sort of stick to that. I would be surprised if we go home underneath 85 for the week. A lot of optimism, though. Economic D-Day, sanctions. Supposedly there's a deal in the works to open the strait. It's all BS, guys. Nobody knows what's going on. We've been doing this for 6 months now. 6 months of back and forth on the Iran war. You'll notice I'm not even really talking about it much anymore. It's been priced in. It's priced in. My guess is we're going to tick higher up to about 85 to close the week, but I would love an opportunity to bid down there at the point of control. That could be great. Let's go to our natural gas chart. We will trade natural gas. We're not scared. Something like this, though, it's going to be really difficult. We broke out of that value area, real tight value, broke high. You want to buy the POC. You're just not really going to get a chance to do it, at least not on this live stream. Let's go ahead and take a look around the horn. What do we got here? We've got a significant breakout here. In the E-mini S&P 500, this would be a trade that I would look at and I'd say, okay, we've broken out. We're up about 0.81%, but a lot of that, I would say even a vast majority and then some, has been just indicative of the U.S. session. See, Bobby Bob, hi, Coach. Today I'm late. That's all right. We're available on demand 24/7, 365. You guys can watch any of these streams you missed. You can watch them on YouTube or in the How to Trade trading room. The only person that can't be late is me. That's the big one. If I'm late, then we're in trouble. But if you guys are late, just pick it up. Pick it up on the replay. That's why they record them and they catalog them. All right, so we're taking a look at this. We want to buy pullbacks, but realistically, you're not going to get probably anything. We may shift gears into a potential Fibonacci play here. That's with the pressure. It's Thursday. My Thursday mentality. I do want to be aggressive. Something like this, probably going to be a pretty good trade. E-mini NASDAQ. Basically the same type of situation. I mean, we're trading up towards the top of the daily range. We've got daily highs. The real question is where can we get long at? We want to buy the POC. That'd be great. You're just not going to get it anytime soon. Maybe before the close, if there's a reversal, that would be a really good late day trade. But right this minute, you're pretty much looking at driving towards daily highs. You're going to need a pullback, a significant pullback, to have a chance to trade this thing. So right now, we're looking across the board, and it just doesn't look very good for getting any trades on this TPO. We'll be looking here relatively shortly, though, around the horn, maybe on some Forex trades we may be able to get in on and maybe take a swing trade going into Friday. We just got to wait and see. All right, so in any case, you can see today's news cycle, not real great. Jobless claims, Tokyo CPI. I imagine we're expecting inflation to rise in Tokyo. The big thing just to remember is it will bring volatility to those yen pairs. Tuesday, Wednesday, Thursday, it's all systems go. We're rocking and rolling. We're looking to make trades. We're looking to put on leverage. If you're going to trade size and you're going to be aggressive, Tuesday, Wednesday, Thursday is when you do it. That gives you an opportunity to succeed. And it also keeps you away from taking size on Mondays and Fridays, which, if for no other reason, can make you tired. It can make you tired. And the last thing you want to do, guys, is get worn out and tired. I mean, right now, it's the dog days of summer. I'm not going to lie to you. I'm a bit fatigued. These markets are slow, and the amount of patience that it's taking to trade is exhausting. You're looking at the charts. You've got your levels. You got your trades, and, man, you just want one of your levels to get hit so you can get in there and make a trade. The problem is that there just isn't anything really there. And I'm not really into doing tradertainment where I just throw down a long or a short and we sit there and we watch the P&Ls go. That's not what good trading is, and it's not what it's about. So that's sort of where we're at for today. I don't know if we get a trade or not. Starting to pull back a little bit in the NASDAQ. I would love to take a 30-minute pullback there on that most recent wave. We'll be watching that one closely. If we do get a reversal, we're not scared to get in there and get that one done. So Tuesday, Wednesday, Thursday, all systems go. Here's our weekly performance. It ain't good. I mean, it really isn't that good. It's been slow. I mean, it's been very slow. Weekly performance right there, you'll see our gross P&L, our commissions. I adjusted our commissions. We were getting double charged on our commissions, and I ignored it. So even last week's numbers were a lot bigger than this week's. But you do see your weekly performance is still about up $100, which isn't really a lot of money, especially going into a Thursday session. Gross P&L started off Monday relatively good, relatively strong. With a gold trade, and then we had S&P 500. But it was a pretty good trading day Monday compared to today, maybe. Dow Futures was a real nice trade on Tuesday, and WTI crude oil. That was our biggest day. We were sitting there up around $420. Yesterday, we took sort of a hit on the gold trade. That was necessary. On Tuesday, the last trade. We cut that gold trade off. That was probably the best trade this week. If we did not cut that gold trade off, we're down probably about 1,000 or so. So I thought that was more than likely. When we leave this week in the green, the gold trade, cutting that one off is probably why. Copper, same type of situation. You'll notice that minus 300. We were only looking to take about a 225 loss on that, but we ended up losing 300 because of slippage. It was a very thin market. We were going through rollover. Futures market rollover, and copper was thin anyway that time of day with rollover. It was just a really choppy, ugly trade. It was one of those that we would have loved to have hit. It would have been great. Probably would have made our week, but that's a significant loss right there. It's about 310. You'll notice that loss is bigger than our wins. That's not good. We had it designed to be about a 225 loss. The slippage got us, though. And remember, if you're trading multiple contracts or big positions in thin markets, slippage can get you. Slippage on that trade was about $75, and that really cut into our P&L significantly for the week. We should be sitting up right around 200, 185. We're not. Doesn't matter, guys. It's part of the game. Slippage is part of the game, and if it's killing you day in and day out, if spreads and slippage are killing you, then you've got to figure out how to mitigate the damage. That trade right there was a market order trade. This copper trade was a market order trade, so we missed our entry. We weren't really astute on our entry, and then we got killed when we hit our stop market that got us out of the trade. Remember, stop-loss orders are stop markets. That means you're filled immediately, and that it can be problematic in a lot of different ways. You can get filled, sure, and get out of the market, sure, but typically it's on the market's terms. It's not your terms. That costs us extra money. Don't ever overlook the impact of commissions and slippage when you're trading futures, and when you're trading Forex and CFDs, spreads are everything. You've got to be very astute with your spreads. All right, guys, let's get back on over to price action here. I think we may have a tasty little trade developing. Let's see, low 511.50. So let's go ahead and just dial these Fibonacci's in. Is this really a great trade? No, I would call this probably a C trade. However, it is a Thursday, and we do have to get something going at some point this week. High 29,678.50, 29,678.50. I would say it's a C trade. It's not a great trade. The size that we're trading on those other TPO charts, probably not going to replicate it here. We want to take the trade, the pullback to 38%, because we are up about 1.25% on the day for the NASDAQ. But I don't really want to go huge size. To me, that feels like it's gambling more than anything. So I want to take this down. I want to take this right down to a buy limit order. Instead of 2 lots, let's go ahead and rock a 1 lot, which is still significant when it comes to the NASDAQ. The volatility can be pretty big. Let's go ahead and shade that. So let's go ahead and put our buy order down. And so we've got a buy order right there at about 29.1650, and you can see that what is our Fibonacci retracement, 14.75. So I like my entry point. You can see the trading dome is alive. It's alive, so if it's alive, we can trade it. And what this essentially is it's a pullback right into what you would call a base area. I mean, if you remember, we did that rally-based rally workshop not too long ago. It's not a clean base, but it's still a base. Hard to see because we're not trending, but off of these lows, these 9:30 a.m. opening bell, ding, ding on Wall Street, right? There's your low. Boom, reversal, base. This turned out to be a demand zone. Now, it's very choppy in there. I'm not going to argue with that. But however, you've got an opportunity potentially to buy the top right there, 38%. We can wait for a deeper pullback there, 29.575, and we'll take that trade too if it comes down to it. I mean, if we see rotation down into the guts of this, we'll take that. However, very sort of measured trade right here. We're going to look to make about $100 on it. We don't want to get too carried away. We're still sort of in stack 'em mode. Let's see if we can stack up a winner there. But down in here, I really like it down in here. Now, that is sort of where our demand area is for the U.S. session. You can see there's your rally off of those lows, rally, base, rally, and now we're coming back. Odds are this is a much stronger trade than what we're going to do right here at 38%. So our leverage on that trade right there is going to be bigger. It's going to be bigger. I like it a lot better. You've got established demand down there, rally base, rally formation back into the golden zone. And if you want to go ahead and throw up your TPO charts, you can see that you're sort of right around that point of control, aren't you? Now, the real problem with this trade is, do we get it? That's the question. Do we get it? Could be trouble. Could be, not trouble, but could have to be patient here. All right, the YM sort of moving in our favor here. You can see exactly where we're looking to do business. I want to sell the top of value. I believe it's a pretty strong trade. I would say it's a relatively strong trade. So let's just wait and see. Right now we've got a rally about another 33 points. No, excuse me, another 50 points or so, which isn't really very much. The way that I gauge how far I believe a 30-minute chart will go is I take a look at my ADR, my 13-period average directional range. The previous was about 91. So 91 is about 91 points in the last 30 minutes or so. So if we're looking at our low right there, it's 53,716. Let's go and add 90. What is that? 53,806, somewhere in there. So 53,806 suggests that this 30-minute bar should top out right in that zone somewhere. It means we've got a premium entry. Now, we are going to give that trade a chance. We're not going to bail on it like we bailed on that copper. Well, that's not true. We let the copper trade play. But the gold trade earlier this week, we bailed out on that relatively quickly. We're probably not going to do that here. We're probably going to maybe not take a full-fledged position, but we are going to give it a chance to work. So that's probably the trade that we're going to get, I would think, potentially in the next half hour, but it's got to develop, and we got to wait and see if there's enough bidders to drive us to that break point. I like it, though. If I had to bet, I'd say that's the one that comes into play. All right, so the weekly performance here, we're not blowing anybody away by any stretch of the imagination, but we've still got some time left this week to make a score. That's sort of the way that I look at it. Have we made a score yet this week? Not really. We need to make a score. Very slow week, very flat. And if we walk away a winner this week, I think we're going to be in pretty good shape going into next week. That's the way I sort of see trading. Maybe you do, maybe you don't. If you want the big money and you want to trade size, God bless you. Go get them, and I'm pulling for you. All right, news of the day. You can see we have just a litany, an absolute litany of what I would call peripheral metrics. There is no single metric on that list that is really worth much of anything. These are all peripheral metrics, but let's run through them real quick because they are instructive. We can broaden our horizons, maybe get an idea of if we want to be economists or not. I remember economics back in college, micro and macro. Hated both of them. Got decent grades in them, but I thought it was all just stupid theory. If you like economics, go with it. Learn all you can about it. Throw yourself into it. It's interesting, but that's all theory. Spoiler alert, it's all theory. All right. Initial jobless claims was a big figure today. The three-star economic event, 203,000 beneath 208. And 207 retail inventory is not even sure really what that is. Goods trade balance. You can see the trade balance is negative and it's growing negative. Typically, the United States runs a debit. Or is that a debit or a credit? I don't even know. But it is negative. So it is negative. We know that we always run a negative goods trade balance here. We're a consumer nation. That's typically how that's worked since the beginning of time. Continuing jobless claims, that's the number of people that are still on the unemployment roll.
still a little bit less than expected. I wouldn't call that number really worth anything. I'd crumple it up, throw it over my shoulder. Let's see, jobless 4-week average, 205,000, and that's a little bit bigger than the previous release. So 4-week average is growing. That suggests that more people are headed to the jobless unemployment lines. All right, natural gas storage is going to be our fundamental of the day. Came in at 15 billion cubic feet. Remember, this is underground storage here in the United States. 15 billion cubic feet. That was beneath the 19 billion expected and beneath the 16 billion previous. I'm going to show you some seasonality here that'll put that in context, but that is our fundamental of the day. We're taking a look at, it looks like we got some dropped frames too. That's too bad. Let's see, KC Fed Composite Index. Don't worry about that. 4-week T-bill auction and 8-week T-bill auctions. These are interesting. Ticked a little bit higher. And you also saw the 8-week tick a little bit higher. So those yields are headed higher. And the idea that the Fed and the Treasury were going to sort of come, not necessarily conspire, that's the word, conspire. I almost know English, guys. Conspire to lower those yield rates. It's not working. 4-week T-bills tick higher week over week, and then the 8-week, which is 2 months, right? 1 month and 2 month, essentially. You're looking at those yields are ticking higher. That means those interest rate expectations from the market itself, not necessarily the CME Fed Watch, but the market itself, those are coming into play. People believe that there is some tightening on the horizon. Let's wait and see. We haven't seen it yet. All right, so let's go ahead and take a look at our fundamental of the day is going to be our natural gas right here. U.S. energy firms added 15 billion cubic feet of natural gas to storage in the week ended August 21st, below expectations and marking a smaller increase than the 17 BCF injection recorded during the same period last year. And the 5-year average, is 33. Yeah, about half of that. The latest build also slowed slightly from the 16 BCF, billion cubic feet. That's what that stands for. Increase exported for the week ending in August 14th. Total inventories rose to 3.18 trillion cubic feet, leaving stockpiles around 0.9% below levels. Why is this important? It's important because we're going into the fall months. North America, you're going to be using a lot of natural gas for heating, and I'm going to go ahead and show you the supplies. This is typically what this looks like. This is pure seasonality. So a lot of folks ask me about seasonality. Shain, are there seasonal trends? Of course there are seasonal trends, and there they are. Bigger than life. I mean, there they are. Typically the trend is that you get a supply build sort of in the spring and summer months, and then you get a drawdown in the winter months. The reason why is the United States is in North America. The wintertime consumption typically it results in draws on supply typically every month. So you do see that. That's about as clear-cut of a chart seasonally as I can give you. Nice big rotation to the downside during those winter months. You can see 2026, you're looking at those draws significantly December and January, maybe a little bit into February before you start building those supplies back again. So typically, what does all this mean to natural gas? It means that the price goes up in the winter because there's more demand, and price goes down in the summer. Now that's changing because they're using natural gas to power AI data centers. Whatever you think of that. If you like your chat GBT, I guess it's worth it, right? But what we have is seasonality beginning to change a bit. However, it's pretty entrenched. Wintertime in the Northern Hemisphere, wintertime in North America means more natural gas consumption, and in the summertime it means less. So you get your supply builds in the summer and your draws in the winter. That's relatively straightforward. Probably the best example of seasonality that I could ever give you is that chart right there. It's perfect. It illustrates demand, demand taking those supplies out of the system when the weather gets cold. Get ready for higher mortgage rates. Eli, we locked our mortgage in. I can't remember what it was, 6.5%, something like that. There's an old saying, Eli. It says you marry your home and you date your interest rate. So the idea is that when rates go down, you refi and get a better payment. I don't know. I don't really know what I think about any of it anymore. I've been doing this for so long, real estate especially. Been in that game a long time. All right, let's get back on out to our TPO charts. Unfortunately, it's boring me to death. We may just take a boredom trade here in a minute. I really would love this pullback, though. This would be a nice play in the NASDAQ. I don't know if it's worth only $100. I would love this late in the day. If we could get this trade out of gold late in the day, I would be oh so happy. And then, the YM just doesn't look to me like we're going to get rotation up towards the top of our value area. That's the trade that we really want. Tell me what you want, what you really, really want. I would like that one. I think that's a really strong one, selling right up there, right around 53,775. That's a banger. That's an absolute banger. All right, let's go ahead and take a look at some of these news items here. Breaking news. If you're the reason why we use CNBC, I got this question the other day. Not everybody's a fan of CNBC because of the media bias that comes out of the NBC. Typically, you see people that are against most media outlets, NBC or Fox or Bloomberg or whatever. Trump signs order to rename Lake Ontario Lake America. Yeah, that's important. You got a war raging on. You got the Strait of Hormuz closed, and we're talking about the lake of. What about the old songs, man, that all talk about Ontario and the lumberjacks bringing lumber down into Ontario? What about all that? No? The Lake of America. This guy just is a crack up, isn't he? All right. In any case, there was some really big news out that is a big deal. And this broke yesterday. Fed, NASA, and DOJ among victims of Chinese state-sponsored hacker group court documents. It shows that the Chinese hackers state-sponsored means that they were not a subsidiary, but they were sort of the right hand of the government, of the Chinese government. And it shows these hacking operations. And we're pretty sure that everybody hacks everybody else. But still, this is a big deal because of what it did. Hacked the Federal Reserve, the Senate, the Department of Justice, NASA, and other federal agencies were victims of computer intrusion by Chinese state-sponsored hacking group. The DOJ said as it announced the seizure of internet domains used for hacking platforms. Well, there you have it. So what is this? The very next day, this happened about an hour ago, declaring a national emergency to secure the United States bulk power system. Trump signed an executive order that declared a national emergency over the electric grid, the power grid. Interesting. One of the biggest things that we've been talking about for a long time, and by we, it means most Americans that sort of study the flow of energy, that understand a little bit about how our power grid is constructed here in the United States. It's antiquated and it's regional. Think about a patchwork quilt. If you've ever seen a quilt, it's a piece from here, it's a piece of fabric from here, stitch it all together, and at the end of the day, you have this quilt, right? Well, the United States hasn't really done much to upgrade their power grid for a very long time. There's relay centers that are above ground that should be buried just for national security purposes. You've also got the infrastructure itself, the technological infrastructure that actually manages the relays and the flows of the power from one regional grid to another through these relay stations is antiquated. It's all old. And so it's no coincidence that when you see a major hacking operation announced by the Fed and the DOJ and these folks saying, hey, we've been hacked in a big, big way by a major hacking program, it's no accident that the next day Trump signs an executive order to declare a state of emergency over the United States bulk power system. They know that the power grid is susceptible. They know that. It's been hacked before. So, long story short, rolling blackouts in the United States, power shortages, all of that stuff, if it does come to pass in the winter months, could spell huge price action in the markets, huge price action, especially in the energy markets. Natural gas, I can almost bet you, will go through the absolute roof if you see rolling blackouts and not enough energy. People will turn to gas because there won't be any other option as opposed to those electrical outlets, the baseboard heaters that many people have. I'm telling you right now, this type of timing, I mean, we're already on high alert. We're already on nuclear high alert. You know, the head of the CIA goes to Russia and has a sit down with Putin, supposedly, or some Putin officials. All of it is very alarming, but an attack on the United States power grid has been something that most people in the know, and I'm not going to say that I'm in the know. I don't have any connections in Washington, D.C., but we do watch these energy markets, and we have an understanding of how energy works in the United States. This could be a major event. And every week for the back office, actually for the back office over at Switch Markets, they want my opinion on risk analysis. They want fat tail risks or something called tail risk, things that we're not thinking about that could really drive the markets crazy. This is a fat tail risk. The American power grid, I mean, if that thing goes down, you're going to have outages. You might have outages at the CME and not be able to get in and out of futures positions. That's serious business, very serious business. That's for sure. Let me see, 512 Eli, my electric bill already went up $40 thanks to AI. Yeah, AI is sucking the energy out of everything right now. But hey, you know, you get to go on ChatGPT and build images, right? Pietro, what would you recommend setting for the TPO for the previous day for gold? I'm interested in ticks per row. Whew. You're interested in ticks per row. That's an advanced question, Pietro. I set it to a 30-minute chart. You're talking about the width. So you're talking essentially about the width. How many ticks, how many price points should be per row. I have left that on the default here on TradingView, and I found it to be extremely accurate for what I like. So what are we looking at right here? Value area high, value area low, initial balance range of about 2, inputs and status lines, volume profile, visibility. You can see inputs right here. Period 1, 30-minute. Row size would be auto. So if you were looking to go to manual here, ticks per row 10, value area percent, guys, I would just leave that at auto, and I wouldn't overthink it. However, if you're serious about building something that is a little more accurate than what I'm using here, there's nothing wrong with that. And I would probably point you towards Claude or GBT or Grok. I'd say, hey, what's the best setting? What are the professional traders using? For me, I've never found the need to deviate off of the default. Now, I understand what you're saying. You're saying, well, my price rows need the width of them are very important. And they are very important because it will mess with your distribution. However, the lines in the sand that I'm worried about are the point of control, upper end of value, lower end of value, and also the initial balance, which is sort of your overnight POC. So if we're looking right now at the YM 30-minute chart, right, it looks like you're going to trade back down to that initial balance, that overnight POC. So we could place a Fibonacci trade right now. We could do that. I would wait for this NASDAQ trade. I think it's a far better candidate for us. Let's go ahead and just see exactly what we've got. We're coming into play, though. I like the trade. I really like this trade. We're aggressive on a Tuesday, or excuse me, on a Thursday. It feels like Tuesday. On a Thursday, we want to be aggressive, and we want to get what we can get out of this trade. 38% retracement. I don't love it. I don't love it as much as maybe getting a shot at that POC, that point of control here for the NASDAQ. But if we do get into selling mode and we get a big sell-off here, we're going to have a chance to scalp right there from 38%. Then I'm going to scalp the point of control, and then we're going to scalp the 62% level. The volume, the position size from the POC will be bigger than what we're doing right now. It will be bigger, and that's absolutely imperative that we understand that. This right here is an initial trade. It's coming right to us. All right, let's go down to a 1-minute chart and see if we can manage this one in real time. Would I call this a boredom trade? No, it's not a boredom trade, but it's definitely coming our way, and let's see if we can get our entry. 38% on the current wave is a big deal. It is a big deal. Make no mistake, the upward pressure is there for the NASDAQ today. However, it's not the breakaway trend that everybody thinks it is. I mean, you're only up about 1%. We start seeing the NASDAQ go 2 and 3%, then we're trending hard. Okay, we're coming right down. We're going to be aggressive here. We want to be aggressive. I'm going to give this trade a chance to unfold and develop and maybe pay us off what we need to be paid off. However, we may have just missed our entry, and if we did, that's fine. I'm not going to sit around and worry too much about it. All right, let's go ahead and adjust our entry point. Why would we do that? Because we just barely missed it right there. The low was 29.17. We were sitting there at 617.50. Let's take this right down to 15.25. That's where we want to be. We'll look for our retracement right up in the guts of that zone, and that's going to be our real tight scalp. So let's go ahead and take a look at it. Now, you don't have to move. You don't have to move your entry point. What I don't like is I don't like it when the market comes right down above us, right in where we should be looking to get long, and flirts with my entry by just a few ticks. I'm not interested in that. I won't play that game. I trade on my terms. I don't trade on the market's terms. And I know that's aggressive and it's a little bit standoffish, but that's how I feel about it. If the market's going to come down and flirt with my entry by, what were we? We were at 1650. The low there was 1775 by about a point. I'm not interested. We can get a better deal than that. So let's move our profit target down a little bit and see if we can go ahead and get this trade. Now, I love what's happening on the 1-minute chart. You are seeing compression right around this 38% level. We should get filled up right here. I feel like that's probably a rock-solid trade. Let's just wait and see what develops here, though. We're right there, knocking on the door. You can see exactly how volatile the E-mini NASDAQ is. Should get filled right now. Incredible volatility there. Okay, we should be filled. Look at the spreads, very thin down in there. Did we get filled? Did we get filled? We should get filled right now. Okay, now we're filled. Now the market needs to go in our favor, and it did initially. That's a pretty good move for us. Starting to trend just a little bit higher, about halfway home. Let's go ahead and wait and see exactly what we get. 25.45. We probably should have traded a little bit larger leverage and looked to get in on that initial bump. Let's wait and see what happens here. Once again, we're aggressive. We're letting these things play out. I'm not just going to pull the plug on it, at least for another minute or so. If the market does get ugly and fall away and blow up in our face, then we probably will look to exit. However, I want to see what happens at this level. Okay, the market's now coming down a little bit, and now we're going to have to start looking for protection. All right, we've got about another 38 seconds. You guys see how wild this DOM is? Starting to go in our favor. If we don't at least get a retracement right up into this zone, we didn't get any move at all. So I'm more than happy to take a loss if we don't get our move. However, this is a pretty good zone. We should get a bullish kick. Let's just wait and see what happens. If it happens, great. If it doesn't happen, we'll scratch off the lottery ticket and take the loss. Breaking our way 15. It feels like we want to make another leg up. It really does. I mean, it feels like the bidders are there. We're not asking for that much. I mean, it's 115. It just isn't that much. It's another 4 points. We're still looking at this 40, 25, incredibly volatile in there, but that's the NASDAQ. If you're trading the NQ, you got to be used to that. All right, I am done screwing around with this. We are going to protect this trade right here, and we're going to go ahead and risk our $70 to get 115 and see if we trade up a little bit higher. We've got a pretty good opportunity, but once again, it's just very, very choppy in there. Not really. This isn't the kind of trade that you're going to make your week on. I do like the bullish price action there, 30, 35, 40. There are bidders from that zone, and we're playing this extremely tight, but we've already given it an opportunity to work. We're in this trade almost 2 minutes now. It needs to kick higher, or I don't want any part of it. We know we've got better entries down there at the 62% level, and we know we've got better entries from our point of control. So we've got 2 more trades potentially on deck for the rest of today. I have no interest in drawing the line in the sand here. Okay, out. We're out. Bam, we got hit. Now, is that the right thing to do there? We lost $70. Is it the right thing to do? In my opinion, it is. It is. Because the last thing I want to do is go in the hole deep when I know we have other trades coming our way. Bottom line. So we're still in compression right around that line in the sand, 38%. Once again, I'm not interested in sticking around there. Our next entry point is going to be right down there, right around 29,575.50. Now, I love that trade. We're going to go 49, somewhere right up at 79-ish. I want to pad that. Not 79, excuse me. We're going to go 77.50 there, and that's going to be the game, 29.77.50. That's going to be it. Instead of rocking a 1 lot, we're going to rock a 2 lot, and we're going to look to make a little bit of money on this trade. It's a superior trade. It really is a superior trade than this. We're not really trending. I wouldn't dig in and just try to sell the ranch or just go long, just to go long here. I think this trade could easily, or this market could easily rotate back down into the guts of that range. And so when you look at your 30-minute TPO chart, something like this, down in here, pretty good stuff. Where else are we looking to go? POC, point of control, 29,585. Absolutely. $585. We want to be in. It's exactly $585. Let's go 75 here. Let's go 75 somewhere. Now let's be a little more aggressive here. I want to get in on that trade. 87.50. Let's pad that a few points and see what exactly develops there. So there's our trades. There's our trades. This trade right down in here, I want it. What could we do right here? Got a chance maybe to make 250, 300. Very doable. Very, very doable. I like the opportunity there potentially to get that. Let's go down to our 1-minute chart again and see exactly what's developing. It's starting to trade a little bit higher, I guess. I mean, maybe we pulled the trigger on it too soon. For me personally, I'm not interested. From my experience, when these areas get saturated, they typically give way. More than happy to wait for the point of control and the 62% level down there. I like 29.6 for a healthy bounce. Eli, 29.6. This area right here. Yeah, why not? Could get one. For me, I mean, the market's definitely changing, though. You're seeing it pair gains. You know, is that an area? Maybe we should have held our longs. Could have held our longs. I'm not in the habit of doing that, though. That's not a good, not winning trading as far as I'm concerned over the long haul. Okay, so we did see a move in the POC right there in your E-mini Dow. We still wanted to sell the top. the top of your market there. The top of value. That was really what we wanted to do. Now, what do you really have? Well, we moved the POC up here, right? So we traded the most instead of being down here, this price bar, down around 53,475. We moved it up here. Now your POC is right around 53,689. That area right in there looks to me like it's giving way. Wasn't really interested in trading that anyways, just because, well, number one, I didn't see it. Well, let's mark it. Let's see if we got any bump at all. Any bump at all off of that one. Somewhere right in that zone. Let's go down to a 1 minute. You got a little bit of a scalp there. 94 right up to 7, but the lid on that's looking like 53.7. To me, it's suspect. I would call that a suspect trade. You don't necessarily want to be taking those. Do we want to sell it right now? We could. It's a rotational day. I mean, if you wanted to sell, you could sell. We could sell right here, sell the point of control, the POC. We could sell and put our back against 53.7 if we wanted. Lots of things we could do. What should we do, right? Gold, strong trade. That's a strong trade. We're just a ways off. Really quiet gold market. Somewhere right in there, 46.50-ish, 46.51. And that's where we want to do business. It's just still $12 down there. This time of day, we may or may not get it. Let's go back over to our NQ. Well, there's sort of our move to the north, the top side. So maybe we pulled the trigger on it too soon. Personally, we'll take a $70 loss. I'm not too worried about that. What we want is we want to get a really good trade. We want to get a good trade. Not playing trends where there's no trend there. We want a good trade. And that's typically a 38%er is a good trade. It's just not that big of a wave. You know what I mean? It's a secondary wave. It's not a primary move at all. Not at all. That's what I would be thinking. Pretty good, though. Could have taken the money, right? We could have used it. YM, now you're right back up to the point of control. I mean, is it time to take this trade? In my view, no. It's consolidation. It's not overly attractive. Don't really have much of a bias here towards the E-mini Dow. Wanted to sell the top of value, didn't get it. That's okay. We didn't get it. Let's go ahead and pull that off the board. Let's go on over to E-mini S&P 500. Okay, this essentially is the same trade as we just saw in the NASDAQ. There's your pullback, 38% pullback. Pretty nice bounce right off of 77.44. Really nice scalp. I mean, playing for multiple contracts there would have been about $25 a tick. And you can see that's sort of the area that's developing. So right now, as we're reading price action in the U.S. session, what we can see with our eyes is that we're at a turning point. We're in an area where, okay, the E-mini S&P was up significantly. The E-mini NASDAQ was up significantly. And now these markets are starting to shift gears. There's a hell of a debate right now. Are they going to stay bullish for the U.S. session or bearish? Right now, the bids are hitting it. So it's not necessarily, those levels work. The 38%'s worked perfectly. But what do we see happening later in the day? I would be watching those 38% levels closely. If they give way, and it looks to me like they're going to, they're being challenged. I would be looking for secondary entries. The NASDAQ's going to take that level out. It's going back down there to check it out again. How long can the bidders really hold on from there? It's tough. It's problematic. So we've been sitting here, all week long. We're about at scratch. We're barely positive. We're at scratch today. As far as what should we be looking to do, we want to trade. We want trades. That's what we want. Let me see, 512 Eli. I just do not like sideways action on bigger time frames. Well, you get chopped up. And that's exactly what's happening. You're getting the bidders are there from 38%. But look, they're gonna relent. My guess is you're gonna break lower here on this 2 o'clock hour. 2 o'clock Eastern. We're about 2 minutes off of that. Let's go ahead and just wait and see if this is going to develop. But for me, is this worth the risk? Remember where we got out. We got out right there. Is it worth the risk? Holding it. Okay, we're coming off now. Now we're coming off. We come down into the guts of this range. This is where it's going to get fun. So let's see. NASDAQ, you don't want to be holding longs now. Pairing gains up only about 1%. 1 minute chart going into, but what do we got, about minute 20, minute 19, going into the 2 o'clock hour on the East Coast. What happens, right? What happens? Gold's starting to come down. I mean, we're still about 70 ticks off, about $7 off of what we want to get accomplished there. But, I mean, there really is the makings, the fixins, excuse me. The fixins are there for a really great late day trade, the NASDAQ and potentially even gold. I think we're going to get this one relatively soon, though. I really do. 1 minute left. Let's go ahead and watch the last minute here. That NVIDIA manipulation was too strong for me to trade today. Yeah, we're going to talk NVIDIA here in just a second. I'm going to pull up a price chart for NVIDIA and read you some of the headlines because it's a big one, man. NVIDIA was crazy. All right, I'm going to go ahead and keep an eye on this NASDAQ trade while we're talking, but gold and NASDAQ could potentially come into play later on. E-mini Dow, you can see the same basic thing setting up in the S&P 500. E-mini Dow, let's go there. Now, I mean, there's your sell, right? Let's go ahead and see. Let's pull up our TPO and see if we've got anything cooking here. Okay, so right here, you're coming back in. You broke beneath that point of control. Now you're breaking down. What do you want to do here? Well, you'd love to buy the bottom of value down there, 53.5 1/4, somewhere down in there. Pretty good trade, but you got to come off about another 170 points. That could be a fantastic late day trade. It really could be. All right, what do we want to do right here? Could we trade the E-mini down now? Absolutely. We could go right here with a sell limit, our forced sell limit order, right beneath the point of control. There you go. Take profit. We're going to have to try to make some money, maybe 250. That would be a nice trade. The real question is do we get any of these things? I mean, the frequency of trades, you'll notice, is way down. I mean, we got one shot at the NASDAQ. Ew, tough. NASDAQ coming off the NQ, really choppy right now, really choppy. We'll just go ahead and wait, see if that develops here. Gold sort of rallying a little bit. I would be surprised if we get that one. And then this one right here, we probably have a shot here on this E-mini Dow, something like that. Let me see, Eli. My analysis showed me NVIDIA dropping. That overnight session was serious. Well, all right, if we want to talk NVIDIA, let's talk NVIDIA. Probably a good time to do it. NVIDIA earnings takeaways. Wang forecasts 70% fiscal 2028 revenue growth, far above estimates. NVIDIA reported better than expected fiscal second quarter results and issued revenue guidance that topped estimates. The stock jumped 4% on the company's forecast for the next fiscal year. Earnings per share, these came in after market yesterday. EPS came in at $2.22 adjusted versus $2.10. NASDAQ has my attention right now. $2.10 estimated revenue came in at $96.22 billion versus $92.17 billion. The revenue for NVIDIA, here we go. We're going to be dancing here in a minute. The revenue for NVIDIA doubled year over year. Staggering revenue growth. Okay, here we go. Okay, there's the play. We bought the point of control. Right now, the NASDAQ is coming off big. It's coming off very, very big. 1 minute chart. It's overextended. Let's see if we get a bounce. Let's see if we get a bounce up right around 60. Still coming off 50, 30, 100, 100, 100, 170. Okay, we're coming off in a big, big way. 140, 140, 50, 50. Very, very choppy, and they're right at the point of control. That's what we would expect. 90, 110, 80, 120, 170. Okay, now we're getting hit a little bit. Do we want to add to this position down here? Typically, I don't like doing that. Let's go ahead and scratch that off and wait and see what happens here in the next minute or so. 70, 80, really a violent move right there after that 2 o'clock hour in the E-mini NASDAQ, really crashing. I mean, this is NASDAQ stuff. No question about it. We are long from the point of control. Price is now firmly beneath the point of control, about 140, about 60, about 70, 132, 240, 180, 160, 90. We're waiting for this thing to break back positive, but we are going to have to throw some protection down. No question about it. 200, 120, 190. The market is just absolutely crazy right now. We're at 83. We got long at about 87. Okay, there's our bullish break right up there. We need to see something good happen for us here. The market is definitely pointed down, though. Extremely negative all of a sudden on the NASDAQ. We're plus 110. We're plus 50. We're plus 40. This thing's happening fast. Plus 30. Let's see if we get a gap up here. Okay, coming against us now, 80, 60. We've got to be very, very careful with what we do now because the price action is down 40, plus 60. We need to see something break to the top side or we're going to get out of this thing relatively soon. 20, 90, plus 10, plus, okay, minus 160, plus 10. Very, very close, guys. Very, very close. Plus 30. Absolutely crazy right there at that point of control. We want to see a little bit of relief. Plus 110, plus 80, plus 90, plus 80. We want to see the next leg up. Let's break out of this 1 minute chart. Let's break to the top side there. Let's break up towards that plus 320. That'll make this worthwhile. Plus 70, plus 70, plus 70. Do we hear anything? Are we going to establish a little bit of bullish price action? Plus 40, plus 100, plus 90, somewhere in that zone. Plus 110, plus 1. Let's see right here. Okay, coming back down against us. I mean, this is really tough to sustain much of anything, and now the market's starting to get negative on us. We've got to start thinking about making a play to get out of this thing. Plus 90, plus 150, plus 180, 270, 300. We need to start looking for the door right there. 350, 240, 210. Crazy action in there. Plus 160, plus 170, minus 210. Let's just give this another minute and see what happens. We may be on the hook for it. We just got to go with it. We probably should have been looking at our 62% level, a little bit better than the POC, but still, let's go ahead and wait. Let's wait. Let's be patient with this thing. 250, 260. It's going against us, though. Now we have got to look for the door, guys. We have got to start looking for the door. I'm going to go ahead and pull the Band-Aid. If we do take out that Fibonacci level right there, 62% is probably about all you're looking at here. It's got to make a stand here or we're going to be gone. 500, 440, 450, 440, 420. Where's the bottom at? Where's the bottom at? The NASDAQ's coming off big. These are the entries we want down here. I think we've got to go ahead and pull the Band-Aid. We've got to pull the Band-Aid. We've got to take the loss. I want to get out. 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 Let's go ahead, stop loss here. Let's put our stop loss right down beneath that 1 minute. And now we're going to go ahead and extend because we've got to make this worth our while. So the market either turns in our favor or it does not. If it does, we're going to get paid. If it doesn't, I like our protection down there. It's still very tight. We should have been long from the 62% level, but I wanted to be aggressive. The one thing we couldn't do there is we could not add to that position when it's against us. It would have been way too big, and if we would have lost, we would have got hit. Okay, so now we're back up to about break even. We're about at 90. We're about at 140. Not a bad rebound off of that 62% level. I would have loved to have won there. Let's take a look at where we're at with the POC. Are we going to get some bidders involved in the market? Is this where they're going to bid from? We're back above the POC, so we've got an opportunity potentially to get rotation on the top side. This is going to be tough, though. This is going to be tough, no question about it. It looks to me like we've got our trade dialed in. Now, the real question is what do we want to do? We took the draw, guys. We took the draw. You know the rule. Once you take the draw, you've got to wait this thing out. You could scratch it. You could scratch the trade right now. Take the plus 160, plus 150, plus 130. Just remember, that's not trading. You cannot take big draws and small profits. I would rather lose 590 right now than take 20 off the board and say, oh, hey, look, we won. We didn't win. We didn't win anything. That area right there between our 62% and our POC has got to be downside support for this whole MFer. You know what I mean? That's got to be the bottom of this move. This has to be the bottom of this price bar, this 30-minute price bar, or else we cannot justify staying in the market at all. This right here probably would be my last trade of the day. This would be 2 losses in a row. That would put us down about 660 for the day. I'm not interested in really going home negative for the week, but that being said, we have to make some money. We're only plus 110 coming into today. That's not going to feed the bulldog. You can't make a living doing that. So we've got to let this trade play out. This area right now is catching some bids. I'm not displeased completely with it, but odds are, I mean, listen, we're fighting a losing battle here. It feels to me like we are fighting a really uphill type of a struggle. That area is setting up to be robust downside support, but it may take a while for us to get our profit target. Now, there's a couple of things you could do right now psychologically that I will accept. I will accept shooting for more money. I will accept that. I will accept that. Me, I want the 590. That gives us an opportunity potentially to win. However, this market is heavy. We're struggling, getting established above the POC. It looks like we're going to get knocked out. The sellers, for whatever reason, are in there in the NASDAQ right now. Could be a news event. Could just be profit-taking towards the end of the day. Is it a coincidence that POC is exactly where the NASDAQ, the NQ, is up 1% on the day? No, it's not. There's algos in there. There's bids in there hitting the market, but are there enough of them to help us? Selling is persistent, guys. I mean, they are knocking the hell out of this market and have for about the last hour. So what we're seeing is our levels are making a stand. Our 62% level, 29,575 was a winner. Could have been patient there, wanted to be aggressive, wanted to trade the point of control, and it looks like it's going to cost us. If we'd have scaled in more contracts down there at 62%, would we have won? Probably not. It was too big of a risk. Instead of losing 590 on this trade, you'd have been losing maybe 2,000, maybe 15,000. Not 15,000, 1,500 or 2,000. You can't do that. However, we're still in the trade. The POC is catching bids. You know, we're only down about 80 bucks, 70 bucks, 130. We're not getting destroyed here, but it does feel like this market is very heavy. 512 Eli, risk less now. I don't know. Our risk is clearly defined. It went a little bit lower than I wanted to, but we did dig in. I mean, the bidders did dig in at 62%. That pretty much was going to be where our stop loss needed to be anyways. And it looks like we're going to get whacked right here. The market's just extremely heavy. This will be my last trade of the day. 2 losers in a row. I'm not going back to the table for a third. It means that we got on the wrong side of this NASDAQ. We probably could have ridden the 38% level to our profit target. And the POC it's not very good to us. Very choppy right now. So something serious is happening in the markets. Let's go ahead and get back on over to our CNBC. What, did Trump say something? Did something happen? Down about 170. NASDAQ jumps as NVIDIA revenue outlooks lift. What's happened in the last few minutes? Did they just push that? We have a limited window. 116 companies and entities sign on to major AI cyber defense push. That just broke while we were in this trade. No, it didn't. Yeah, it did. So that would be the reason for your sell-off. All of a sudden, we have a limited window. 116 companies, entities sign on to a major AI cyber defense push. So it was something that sort of questions the integrity of your AI system and what exactly is going on. We're still right around that POC. So, I mean, it's not, it's not the end of the world. Let's go over to our trading DOM. You can see just how crazy this NASDAQ is. I mean, that's where we need it to go, quite a ways north. There's our entry point. Really, I mean, we're down the queue a bit, probably halfway to our stop loss. If I was betting, I would say we're probably going to get whacked here. If we get whacked, we get whacked. The risk is down. Yeah, here we go. We're going to get whacked right here. Boom, gone. Read 'em and weep. 2 losses in a row, both on the NASDAQ. We got caught up in a sell-off. More than likely, that's your reason for it. That story broke at about 11:48 Eastern, which would have been right in here somewhere. Oof. Brutal trade. This right down in here is pretty good stuff, though. 29,575. That we could have made a stand on and probably made a little bit of money. We wanted to be aggressive with the POC. Probably should have played this down here. But there's no sorries in baseball. There's no crying in baseball. There was your overnight balance. That's your initial balance area, lined up perfect with your 62%, and that's where the support level went. If you wanted to hold anything, I think you could probably hold your longs and be okay here. You'll notice price is back up to the POC, but we just got nailed. We just got stop hunted, essentially, and now the market rotates back to the top side. Still relatively heavy, and the news is not helping us. The bounce is there. Yeah, I mean, there's the bounce from 62%. So our execution was not good today. It was not good. It sucked. And that's the difference between winning and losing. Remember, guys, we want to get in on trades and be aggressive. However, you've got to figure out exactly what you need to do to be profitable long term. Bottom line is this. You take those big draws. You can't cut the trades off. There's your bounce, but we're coming off, guys. We're coming off big. We could probably try one more trade down the queue. For me, I lost 2 in a row, and that's my rule. Even though the first one was a really tight one. 2 losses in a row typically means it's time to pack it up, pack it in. Pack it up, pack it in. Let me begin. So there you have it. A little bit of a loser right there from 62%. That is going to hurt us with our overall weekly. You're going to see that we're going to go into the clubhouse down about $500 on the week, which is fine. And we'll talk about how to manage that type of trading on Friday. I would consider that a small loss on a week, to be honest with you. So we'll probably cut our leverage and try to nibble into that loss and go into the clubhouse for the week, maybe around even or probably down. But this does look like a negative week, the first one since we started doing this. Typically, that is the way the cookie crumbles, that's for sure. Really tough day. I like 3 strikes and out. Eli wants one more trade. The trade is down here, though, if you're trading this NASDAQ. 78% retracement. More than likely, you're going to get happy from there. Gold's coming our way right here. I would have loved to have got that gold trade. Just didn't quite get it. The YM, we wanted to sell right up there from our point of control, our POC. Just didn't quite get it. So that essentially is the day that was garbage. Here's your WTI crude oil trade, breaking out to the top side. This would be what we would call a K period. What's the high here? 84 and a quarter. This would be a real similar type of a situation. New York session, spike low, spike high, 83.40. Be a pretty good bid later in the day if you get it, probably in the next 17 minutes or so. Hard to really say, though. All right. E-mini NASDAQ is coming off. Really beautiful work at 62%, though. That was the trade, right? Boom. Compression, and now we break. I mean, here it comes. It's coming for you guys. It's coming. It's coming. 2 losses and we're out. I think that's probably the best play. But that trade right there, 78%, that would be the next one up. NVIDIA. Yeah, let's go ahead and look at NVIDIA real quick. This is a gold, really fantastic level there. Let's go NVDA. I should know that one by heart. It's been all over the news lately. Essentially, that's what you're looking at. You're looking at a gap up today, 227, something like that. You can see what we wanted down here was about 204. Really a big earnings report is driven. This is 7% of the S&P 500. 7%. So if it's not the foundation, it's definitely a pillar. Interesting stuff right here. So what are we looking to do here? Let's take this down to say, or let's take it up. Let's take it up to a monthly and see where we're at. Monthly chart. If I'm looking at NVIDIA, and we did this earlier on an MT5 tutorial. If I'm looking at NVIDIA, what are the big levels? Definitely be looking at this spike high, swing high from May. That's an all-time high. That's right up there, what, at 237, 236.50. Then you see last month somewhere right around there, 232 and a quarter, somewhere right in that zone. Fantastic stuff. Typical resistance, I think we have to be honest about NVIDIA. 250, that has to be a topside target. 275, I would wager that that's a topside target. And then also 300. If you're serious about this stuff, 300. 300. No question about it. I think most institutional investors are looking for 300 in NVIDIA. All I can say, guys, is it's been a wild ride with that stock. I believe it's made more millionaires than anyone in history. You know, you go back to guys that were taking, men and women were taking stock options that worked for the company back, in 2010, 2014, even up in here, I mean, now you're just, this is one of those charts. It's a brave new world. It's a brave new world, man. I mean, it's all about chips and all about AI, and that is, look at, I'm looking at wheat charts. We have fantastic topside resistance right there in wheat in a macro range. We know shorts from there are going to be pretty good, but no one really cares anymore about things like wheat. They care about AI. They care about chips. They care about data centers. This is exponential gain. This is, world-changing gains. 13.3. 512 Eli, they raised all GPU prices to try and make up margins. Well, the expectations are so high for NVIDIA that they're beating numbers, and the initial price action's always negative. What happens when they fail to meet some of these projections? Then what? Then where does NVIDIA go? I don't know, but I don't see any way we don't stop going north. It looks like all the smart money and all the money in the world is going in on NVIDIA. And if that's the case, good Lord, what can you say about it? All right, everybody. Tough session to trade. WTI crude, sort of a come to papa. I would love to trade it, but what we do is we don't break rules. But that right there is a banger of a trade. That's U.S. session, 38%. A little bit of a hole there, though. I would say that is a little bit thin. But right there, 83.40 is a pretty darn good one. Gold, maybe you might get a late day gold POC play. That would be juicy right in front of 46.50. As far as the NASDAQ goes in the NQ, a little bit of consolidation around 62%. I would guess you probably trade down from here, 29.547, 29.550. That would be your late day trade there. And those are all pretty good trades, pretty darn good trades. That's when the AI bubble pops. Yeah, Eli, I think that the AI bubble, if it's going to pop, will pop because of higher interest rates for longer. Cheap money. Cheap money is a big one. News events like this, anything to do with AI, especially if you're trading something like the NQ futures. You've got to be aware, and breaking news can sink you, and that is exactly what happened over the last hour in that NQ. Believe it or not, I mean, that's the game now. That's the game. All right, everybody, I'm going to sign off for now. We had a long garbage session. I didn't really make any money today, but remember, these are risk days. This is what we have to do. You have to get in, and you have to trade when it's time to trade, and today was time to trade. So you're looking at something like this. You took that short. This one right here is questionable trade management on my part. Probably could have done it. We've had a few losers in a row. That one right there, not real great, that copper trade. So we've had sort of a string of what I would call subpar performance. So for the week, we're going to be down probably, about $400, something like that. You can see our realized P&L since we started with 10,000 is right around 2,500. So it's not the end of the world. We can come back and probably trade as per usual tomorrow. More than likely, I'll be cutting leverage, though, because this is a real sluggish, ugly week to be trading. But if we do get in on something sweet, that's always a good thing. But, today, not good at all. A lot of red on that screen, guys, a lot of red. However, it's all about being profitable, and as long as you're taking small losses or manageable losses, you're going to be in great shape, absolute great shape. And there goes the NASDAQ again, that's for sure. Absolutely, Eli, my pleasure. All right, everybody, if you didn't check out the MT5 AI Assistant Workshop earlier today, go ahead and get in there and check it out. It was a pretty good workshop. I had a lot of fun doing it. So if you're interested in what AI and MT5 can do for you, be sure to go ahead and check that one out on demand. We did that earlier today. Tomorrow morning, we're going to be back live with Kevin Warsh from Jackson Hole. I'm going to go ahead and see if we can get the video up and see if we can get something going with Mr. Warsh. I'm curious of what he's going to say and what he's not going to say. So that's something that we're going to be looking at there. Wait a minute. We got a natural gas trade. We had a natural gas something on the board. Natural gas right there just got triggered. What do we have? Our point of control. Wow, a lot going on in the markets right here. This was a trade that I didn't want to take it because we got two losers in a row. Typically, it doesn't get any better. I forgot all about this trade. My little my little momentum meter popped up and showed me that this one has gone live, plus 20, we're in it now. We might as well manage, but that is a really strong hit on what I would call a major sell-off in natural gas. That is sort of the crux of natural gas. Very, very trending, very trendy. You can see that over the last 15 minutes since I've been talking was a significant move from 296 down to 292. You're getting a little bit of a bounce off of that point of control here, only up about 20 ticks. I believe we sent two contracts long, so about $60, $20, something like that. I do have a rule. After two losses, I don't take a trade, so this is a complete accident. We're going to go ahead and scratch that one off. I like to stick to my rules. Don't really care if it goes up and wins or not. But interesting trade, big move in natural gas. Definitely one that a trade you probably wanted to take that it wasn't even on my radar. We were so far up north. Bullish day natural gas, though. Supply numbers came in beneath where we thought they were going to be. Interesting trade. That right there is a great, as far as the setup goes, look at the elongation in the 30-minute bar, and it tests your point of control, and then you get that bounce. Who knows? Maybe we can talk meta tomorrow. Yeah, we'll talk meta tomorrow, Eli. And any other questions? A very, very quiet group today. Not many questions at all, and that's okay. We just want to do some live trading anyhow. All right, everybody. Brutal session, garbage session. I'm going to go hit the gym and see if we can work out some of this frustration. But interesting trade in NG late. Very, very nice. And look at WTI crude oil is coming right down as well. 38% levels right there at about 83.40. You're trading about 83.63 now. You could get that right at the end of the day and then grab a little relief trade. All right, everybody. Lots of live trading today. Probably too much. Have a fantastic trading session. We'll see you tomorrow with Kevin Warsh from the Jackson Hole Symposium. And as always, trade the action well, and we'll talk soon.